everybody. Today we're going to go over what are Bollinger Bands and some misconceptions about using the Bollinger Bands and how to actually use the Bollinger Bands and how John Bollinger really designed this indicator to be used. So John Bollinger is the creator of the Bollinger Bands. He is really the godfather, if you will, of these bands and how to use them. And it's really a very simple indicator. You have three different lines. You have the green line, as you can see, which is the lower band. You have the middle band, which is the blue line, and essentially the 20-period simple moving average. And then you have the upper band. So these bands are really just standard deviation bands. And the 20-period simple moving average is your default average or line that you use when using the bands. If you want to use EMAs or if you want to change the look back period for the moving average, you can do that. But the way that John Bollinger created these bands was really around the 20-period simple moving average. So the simple moving average is essentially your average that the bands are a function of. So the lower band is essentially a band that's 2 standard deviations below the moving average, and the upper band is 2 standard deviations above the 20-period simple moving average. So the way to really use this is as a trend indicator. Now, before I jump into how to use it the right way, I definitely want to jump in and discuss how you can wrongly use this indicator. Now, I'm not saying this is perfect. People do sometimes have luck with this where they buy the bottom of the band. So if you see this area that I just drew, and then they sell once you get to the top of the band. And notice that if you would have done this back in April and May of 2023 and then sold it here towards the middle of May of 2023, that would have actually been a decent trade. Now, when you have bands that are flat, you generally are looking at price really consolidating, and you can see that these bands are getting tighter and tighter. Generally, when the bands are getting very tight, that means that a move is likely coming. Now, the trigger and the direction of that move is a function of which side of the bands the candle closes. In this case, I am on the 1-day chart, so each one of these candles represents 1 day of price action. So you can see here that our trigger was essentially when the 20-period moving average started to curl up and you had the daily candle, really an impulse candle here closing above the band. The wrong way to do this would be to try to short here after you had your bands contracting and then you had expansion of the upper band and you can see the lower band started to move down. This is actually your trigger for the trend to change. So as you have contraction, as you have price really trading in a very tight range, naturally as the moving average starts to flatten out a bit, the slope isn't as steep to the upside or the downside, these bands start to get very tight. Not necessarily parallel, but they do start to get a lot more narrow. And then as I mentioned, for an uptrend, once you have that daily candle close, especially if you have an impulse candle like this, this is your trigger for the trend to change and the uptrend to start. So you can see here that if you tried to short this at the upper band here, maybe you made a little bit of money one day, but then you can see price continued to just move up and close above this band and hitting new highs. Now, the second part to this indicator is that it is really a mean reversion indicator using just basic direction of the indicator. So as the moving average is going up and price is breaking above to new highs and closing above the bands, the uptrend is intact. And then when you get pullbacks, you generally are mean reverting back to the 20-period SMA. And that is generally how John Bollinger designed this, where this becomes almost your buy point here in the uptrend. So you mean revert back to the moving average, and notice here how we have a little bit of range bound price action. The Bollinger Bands start to flatten out a little bit, and then as you move up and you break above the upper band once again to new highs, that is your signal for the trend to continue up. And you can see here that's exactly what happened. We broke and closed above this this upper band, and we continued to move up. Now, notice here what we have as we start to kind of lose that uptrend. Notice how the moving average starts to flatten out a little bit here, and this is in August of 2023. Notice how price failed to hit or close above the band once again, and you can see here that we almost had a double top kind of forming here. And on top of that, you can see that price starts to move down, closes below the moving average, but that's not necessarily your trend reversal signal. Notice that we had that multiple times here. We closed below the band, but we continued up. So closing below the 20-period moving average is not your signal for the trend to change. Your signal is exactly the opposite of what we just talked about here for the uptrend signaling for a new uptrend. Here, when you have a daily close below the bottom of the band, and you can see that the band is starting to expand to the downside, that is your signal that the trend is really changing and that a downtrend is starting to become the new trend. Notice here, as we close below the band, we continue down to new lows. As we finally catch a little bit of a bid here, we mean revert back to the moving average, but notice how we never close above the upper band. We don't even touch it, actually. So there is no change in trend until you have a close above this upper band. And notice here how the moving average is still sloping downward. We really never have the moving average start to increase again. You can see it flattens out a little bit here in mid-September, but we still never test the top of the upper band. So once you close below these lows, and then you have a daily close below this band, that's your trigger that the downtrend is continuing. And that's exactly what happened. We had a daily close below, continue to move down, slight mean reversion. We didn't even get to the SMA, the 20-period SMA here. Broke down again, mean reverted back to the SMA, which acted as resistance multiple times back in October, in mid-October, and then once again, a daily close below the bottom of the band. We continue to move down, and then finally we have some flattening out here. Now, we really don't have any gauge in that the trend is changing until, one, you can see that we're starting to get a little bit of a slight uptick here in the 20-period SMA, but that's still not your trigger for an upside move. The trigger is the daily close back above this upper band. So notice here, as we're moving down, we never touched or closed above the upper band. And you can see here, as we have this close above the upper band, the 20-period moving average starts to move up as price kind of consolidates here. And the thought is that price will continue to move up. And if we have a daily close or any candle close above it, well, in this case, this is the daily chart, but if you're using a 5-minute candle, it would be a 5-minute candle close above this band. That would trigger the next upside move. So these bands are really not meant to just trade in between the lower band to the upper band or the upper band to the lower band. It's really a function of daily price closing below the band for a downtrend, and then you can see the expansion of the lower band starting to increase to the downside, or decrease, I guess, accelerate to the downside. That is essentially your trigger for a downtrend to start. And then you can see here the moving average is sloped down pretty much until we have a nice move up. You can see the moving average starting to flat out a bit here, starts to increase, and that's when you start to look at the trend changing. And then your confirmation is that daily close or whatever time frame you're on, candle close above the band, and you can see the moving average is moving up. And that's really the simple way to use these bands. It is not a complicated indicator, but people are just using it, and not everybody, but there is a common misconception of how to use these bands and essentially trading in between them rather than just riding the wave as price starts to pierce the upper band or the lower band. All in all, this is a trend indicator. This is not an indicator where you just trade up and down across the upper band and the lower band. And this is really a great tool to use to gauge basic trend, as the moving average is really designed to just track trend. And so using the moving average, the 20 period, and then using the upper bands or the lower bands as triggers for the next upside move for a change in trend or a continuation of trend is exactly how you want to use this. So hopefully this video is helpful. If you enjoy these educational videos, please like and subscribe. If you are looking for a futures broker, especially if you're trading micros, definitely check out Optimus Futures. I'm using Optimus Flow, which is the technical analysis platform that they have. And if you have any questions, you can always just comment below, and you can reach out to Optimus Futures through email as well if you'd like to do that. Have a great day. Thanks for watching, and we'll see you next time.